You're listening to Only in Seattle.
Hello and welcome to podcast number 4 of Only in Seattle. I'm your host, Sean Reynolds. I'm the designated managing broker of Summit Properties Northwest. And today I have with me Mr. Chris Hall from Rainier Title and Escrow. And we are going to be unveiling the shroud of mystery that surrounds real estate title and what real estate title companies do.
Good.
So Chris, thank you so much for joining us today.
Thank you for having me, Sean. Appreciate it.
Yeah, you bet. And so Chris, maybe to get us running, tell me a little bit about your background. How did you get into title? How long have you been doing it? How long have you been with Rainier Title and Escrow?
Gotcha. So yeah, I started about 12 years ago with Rainier Title. Prior to that, I worked a lot actually in retail. Through college, I worked for Starbucks for about 7 years. Went through their ladder going up, ended up managing my own store for a while, and it was just kind of time for a change. And so I ended up getting an opportunity to interview and started with Rainier in their what we call property information or customer service department. So I worked with agents, helped them with farming, helped them with research, understanding this easement, this vesting on a property, who owns it, who doesn't own it, who has the right to sign on behalf. So I did that for about 8 years before I came out in the field. Now I work with agents more face-to-face, help them with their business as well as help answer questions during a transaction.
Yeah, and you and I met because you walked through our door multiple times when we were busy. You were super resilient. You kept coming back. And it was like, oh, that's Chris, our title guy. We need to talk to him.
Yeah.
Let's talk to Chris.
Good.
And you've been a great resource as far as stuff from title that people don't really kind of understand. Title is this thing that's out there that you see in a purchase and sale agreement. You hear about it. You hear about title companies. Tell us what a title company does.
Gotcha. Yeah, it's one of the aspects of real estate that is, I think, one of the more overlooked aspects of it, because buyers and sellers are told that they need title insurance, but they don't really understand what it is. And so it's one of those things that comes up because what we do on a day-to-day basis is we're researching properties. We're looking to see what documents are recorded that affect that intended use of the property, as well as we're confirming who can sign on behalf of that property, who can sell it. So we're working through a lot of research, a lot of old documents, going back to the turn of the century, to look for things that are on the property that can, again, negatively affect somebody's intended use of a property.
You mentioned back to the turn of the century. That's over 100 years ago now. Is there a point at which you can't? How far back do records get kept for title?
So for the most part, when we're doing research on a property, we go back to the 30s or 20s. There are times when we go back earlier. For instance, yesterday I was looking at a plat that was recorded in 1915. Sometimes you do have to go back further depending on when something is recorded, and if it hasn't been recorded since, which once something's recorded on a property, it's locked in place, so it never has to be mentioned again. And
that's the point of having it recorded in public record.
That's the point.
Is that it's out there for everybody to see, including the title company.
Absolutely. But there's times when once in a blue moon we'll see a document come across from 1890s. Just because that was when the plat or the original subdivision was created, and that's kind of the starting document for that. We don't go back usually to when there's government lots, which were large areas that were then granted to this person then broke it up and whatnot. We just kind of need the start of that property, which is typically a plat.
Typically when it's developed, taken from a bigger parcel,
break it down,
cut up, and that point gets recorded.
Yep, exactly.
So that's a lot of times the first point that you see. And in the Seattle market, our properties just aren't that old.
Yeah, there are, out of a lot of, especially in King County, Seattle is probably one of the more popular places where you do have homes built 1915, 1920, 1925, that sort of thing.
Right.
But especially with a lot of the newer development that's going on, that's tearing those places down and rebuilding them, especially if somebody's replatted it, that's our starting point. That's where we're moving forward from. In theory, when somebody has a large 1 acre parcel, they break it into 6 smaller parcels. 10 years ago, that's where a lot of times we do the starting research. We don't need to go back previously to when it was a 1
Because your
acre
starting
parcel.
point is wherever it was most recently subdivided.
Those are the documents that affect that property.
Now, today.
Yeah.
Because stuff prior to that, it was probably one massive parcel that's no longer relevant.
Yep.
Because it's been cut up a million times.
Exactly.
Yeah.
Exactly.
Yep.
Yes.
Okay.
Some of the other stuff that we come across that's old like that is like title lands. I mean, those are done on land leases, 99-year land leases. But for the most part, yeah, it's you're just going back to when that parcel's inception was.
The name of your company is Rainier Title and Escrow. People are used to hearing that. A lot of other major title companies are also title and escrow. Tell me the difference between the title process and the escrow process.
So a lot of times during a transaction, you are dealing with title and escrow. They are both sides of the transaction, the way that it works. A lot of times title is more of an introductory handshake to a transaction, whereas escrow is the closing handshake.
It's at the tail end.
Tail end.
Yeah.
And the way that escrow works in that transaction is they're working in conjunction with title to make sure things are cleared as we're moving closer and closer to closing. So a title report is created. We have all the documentation for this property. We're looking for liens, encumbrances, the things that affect the current owner and the property. And then once we get a purchase and sale, escrow gets pulled into it. And they are then working with the current owner's lender to get payoff amounts for a loan. If there's a mechanics lien on a property, they're working to figure out what that amount is so they can have payoffs for that. Then as we get closer to closing, once it gets funded, so the buyer's money comes in, we are then distributing those funds to the lender, to a lien.
Escrow is doing that.
Escrow is doing
Title's work is done by them. Title
Yeah.
is issued the insurance.
They have it all
insurance.
prepped and
Yeah.
ready to go. And
Yeah.
so they're...
And that happens right at closing.
Yeah,
Gets recorded.
They'll record that, which will
Yeah.
then allow it to transfer to the new individual. So when we open title and title works up what we call as a commitment, because it's a commitment to work with us.
Yeah.
It's anything and everything that we see on that property. So it can be if the person that there's a common name, if there's DSHS liens, if there's mechanics liens, if there's anything that's on there, we're pulling it in. Then title is working with the current owner for the duration to see which stuff should be removed, which stuff is actually on this and relevant. And so they're trying to clear things before we get to a purchase and sale. There are times once we get the purchase and sale, they're still working on those things. And then escrow gets involved. They're making sure the payoffs are done and everything is tied up. And so when the new owner gets the keys, it starts with their new encumbrances or liens. It starts with them and moves forward.
Everything's squared away at that
Everything's
point.
squared away.
And so that's one thing that you and I were talking about earlier is the importance of pulling title, giving title as much time as possible, because they may run up against issues that take a longer period of time to resolve than the purchase and sale agreement is written up for. So if you're going to be selling a home, give as much heads up to the title company. We're going to be going into a transaction. Let's pull title, and that's why we do that.
Yeah,
Right?
It makes sense. I mean, there are some cookie cutter transactions, very simple,
Yeah.
very easy. But if there are pending issues, if there's court cases, if there's something that's going on, I mean, we sometimes have to do a lot of back and forth. Attorneys have to get involved. We have to be reaching out to the county to get things cleared up. And I mean, there are cases when a buyer is coming on board and they are willing to take on a previous encumbrance of the previous owner, but they have to sign documentation that waives them saying it's clear title when I get it. I'm willing to incur this financial judgment or something that was attached to the property, but that all again goes forward with the transaction. Everybody has to agree to it.
So if you're a listing agent or if you're a seller, that's why you're encouraged. Hey, let's go ahead and start the title process.
Very helpful. Very helpful.
Yep.
Because we don't want to
More
get
time is better.
Yeah, you don't want to get to where you're making an offer on a property, you're expecting a 30-day close, your lender has agreed to that, they're going to be able to meet that, but there's something that's on title that we can't clear within 30 days. It's you have this contract between buyer and seller, and you're making a lender or a title company subject to this contract between two people, and we always want to meet those deadlines. But there are times when stuff is just too complicated, or it just, due to the nature of the way that things work, it takes longer to clear certain items.
And when that happens, then you guys would issue title subject to those items being resolved at a later date. Is that roughly?
Yeah, and that's one of the, I think, confusing aspects to it is when people say, okay, we're going to issue title, but it's subject to this item. So for instance, if there's a property and the garage is slightly over the boundary of the property and it's going a little bit into an alleyway or it's even into the neighbor's yard or something like that.
It's off the property.
It's off the
subject
property
site.
boundaries.
Yeah.
We can issue a title report that ensures that transaction, but we are kind of, when we say subject to, we're removing that coverage. So if we were to have that in the title report and then later it comes down, the new buyer, 5 years down the road, the city comes up to them and says, hey, your garage is 3 feet into our alley, you need to tear your garage down. They do not have a claim with the title insurance company. They cannot come to us and say, hey, you guys didn't notify me of this. We say, unfortunately, we did. We recognize that it was encumbering this other parcel or this other easement or something. And so, unfortunately, you have no coverage when it comes to us.
Right. Did you read your email? You and I were talking earlier about how we get so much paperwork through, and it's important to, as a real estate broker or a seller or a buyer, to actually take a look through the email you're getting. I know you'll get a ton of, brokers will get a ton of email, and buyers and sellers will get a ton of email throughout the course of a real estate transaction. But you're getting that stuff for a purpose. There's a reason. You guys aren't just sending out email willy-nilly.
Yeah. You're not just buying a case of water here.
No.
You're making typically the single largest investment, and so when we're sending out documentation through the transaction, it's usually pretty relevant. Now, some of it may just be when we offer. So when we send out a title report initially, there's going to be these items on it, and when we have gone through and we've removed one of those items, so we have the seller fill out what we call a statement of identity, which verifies who they are. We can then remove something that was attached to a similar name.
Which happens fairly often, with common names.
Very common.
And like maybe Chris Hall.
Chris Hall, I'm sure there are lots of things.
Is there more than one?
There probably is. We issue something called a supplemental, which is another document that goes out, and a lot of people don't pay attention to the supplemental, unfortunately.
So supplemental is something that kind of updates the original, and you keep getting supplementals until you basically get the final. Until
we get to close. And the supplementals can either be adding something to title or it can be removing something. Right. And I mean, we're going through the transaction regularly monitoring these files, that if something new pops up. So one of the instances is somebody is selling their home and they had some work done on their property on June 1st. They're listing their property July 1st. Well, they didn't pay the person who put in the windows. So
mechanics lien.
Well, that mechanics lien has 90 days from the day of completion for it to be filed. So we're constantly monitoring that file because we want to make sure that if anything pops up before we close, that we're aware of it, and then we would issue this supplemental. Now, we do ask for the sellers to sign certain documents that state that they haven't had anything done to the home, but sometimes
that comes up. Sellers don't always disclose everything that they should.
It happens.
And did you get a permit for that?
Yes. Yes.
I don't know.
Yes. So the supplementals are regular updates to the title that goes on. And then the day of closing, we run an update on it as well because we want to be made aware on the day of closing to make sure that there is nothing else that is going to pop up that's going to cause an issue, especially for the future buyer. I mean, that's the main reason why we're doing it.
Right.
We don't want to have something come up to where the future buyer then has to come back to us and say, hey, this happened. There's now this lien on it. We want to avoid that. We don't want them to have to go through that process that they file a claim with us and have to deal with having this resolved.
And that's another topic / question is, do you need title insurance? What do you tell people? If a broker comes to you and says, my sellers they're not really up for that. They don't really want to pay that fee. Tell me why it's so critical to have title insurance issued.
So it's absolutely recommended. It's not legally binding that you have to do it, but there are a couple of reasons why you'd be required. Number one, if you are a buyer and you have a loan, the lender's going to require a title policy.
Yep. They want their end of things to be insured.
They want to be covered.
They're lending out a bunch of money.
Mm-hmm. They want to make sure that they're in first position. I
Yep.
mean, they want to make sure there's nothing else that's going to fall higher on the ladder than their
In
loan.
case you don't make your payments.
In case you miss your payments.
Property goes
Yeah.
sideways.
Yeah, so it's it allows for that, as well as typically the way that the title insurance is paid for is the seller pays for the buyer's title policy. That's standard procedure.
Yep. Seller pays for the buyer's policy.
Buyer pays for the lender policy. So
Yeah.
basically, everybody's paying for somebody else's
Because the
title.
buyer's getting a loan, so they're going to cover their lender.
The lender. And the
Yeah.
seller, typically why that has happened is because in order to give better confidence to the buyer that there's nothing outstanding on this,
Yeah.
it's kind of a good faith thing
Right.
that is typically transferred. Now, during the last couple of years with the way supply and demand worked, we had more buyers that were willing to pay closing costs, paying for title, paying for escrow, everything in order to get the home. But typically,
Because the home was so hot. I
Yes.
mean, the market was so hot in Seattle.
Yes.
That people are like, I'm all in. I'm paying for everything.
Yes.
This is what it's going to take.
yes, it's the seller that's paying for it for the buyer,
Yeah.
so there shouldn't be really concern. Now, there are times when the seller tries to downgrade coverage, and we can go into that later as to there's different layers of coverage for the buyer.
Yeah.
But for the most part, we always recommend it because you don't want to buy something for hundreds of thousands of dollars or millions of dollars.
I was going to say, this is probably the biggest investment of 99% of
Absolutely.
people's lives. The biggest investment there is, if you can pay a couple of grand,
Yeah.
$1,500
Yes.
to have title to that investment insured, that's probably something you should consider.
Absolutely. And it works different than, say, homeowners insurance.
Yeah, I was going to hit on that too. We hear homeowners insurance, you hear title insurance. How do those two things differ?
So title insurance is more mitigating risk. We're doing all of the legwork before the transaction happens. So we're doing all the research. We're looking at all the underlying documents that affect the property's, again, intended use, and how those affect the property, because we want to make sure and get everything cleared off for this new homeowner to take title. So that
you can convey title from the seller to the buyer, and it's a clean conveyance.
Yep.
Everybody's happy.
Everybody's happy.
New guy starts making his payments.
Exactly. Whereas homeowners insurance, it's more of an ongoing, risk prevention. There, if something happens, they're going to cover that situation when it
Fire
pops up.
happens.
Fire,
Car
robbery,
runs into your home.
exactly.
Something weird.
Yeah. So
Takes care of the physical structure.
Yeah.
And some liability
Exactly.
type stuff too.
Exactly. Yeah. So they're just different forms of insurance, and
Right.
there are risks to both of them. But like
Yeah.
anything, we want to mitigate as much of that risk as possible, just because we want to make sure that for the fee that we incur for this, that new buyer, they don't have to worry about the previous owner and what they
Right.
brought onto that property, as we call encumbrances or clouds.
Yep. And so as a real estate broker, one of the things that comes up fairly often is, should I recommend to my buyers to get an extended policy?
Mm-hmm.
So maybe run through, because this is an option on Form 22D, optional clauses. You can pick the standard one or you can pick extended. And I think the thing most people know about the extended policy is it's required to have a survey, which is very expensive. Could be much more than the title
Yes.
policy itself.
Yes.
Depending on what your property is like and how much they have to survey.
Exactly.
Maybe run me through standard policy,
Yeah.
extended policy.
So the default on the purchase and sale is the homeowner's policy, which is, it actually covers more items than our standard policy. So it's kind of weird that the homeowners is the default, but the standard is a different policy.
Is the standard less?
Standard is typically, it covers a few less things, and it's a little bit less dollar amount to purchase. And the difference between, say, a homeowner's and a standard, a homeowner's is going to cover something like an unrecorded lien. So if there's a lien that's out there that is a legally binding lien, but it wasn't recorded with the county, the homeowner's policy will still cover that, whereas the standard wouldn't. So in essence, if somebody received a standard policy, they would not be able to file that claim with the title
out of
company.
luck.
You're out of luck.
You're going to have to
unfortunately.
square that away on your own.
Yeah, and there are times where, based on the dynamics of the property and what it is, we do actually have to downgrade it to a standard coverage. For instance, if an LLC purchases a property, because it's not an individual, it's not a homeowner, they're not the homeowner, it's a corporation, we have to downgrade to a standard policy.
Okay.
When it comes to the extended, That typically comes into play for the most part of properties larger than 2 acres. Now, we do have a little bit of a window between 2 and 3 acres. If it's a platted property, we can kick it down to our underwriting. They can make a exception to still offer the homeowners policy. But typically, if it's something larger than 2 acres, we either go down to the standard or we go to the extended.
Interesting. And that's based on the size of the property, which reflects the risk in general.
Exactly. With the larger property, I mean, you're dealing with a 3 to 5 acre parcel, you can potentially have more physical encumbrances, or where the person thinks that the fence line is 15, 20 feet, 40 feet in one direction or another. So it cannot be the actual binding property limits of it. And they, as you said, they would have to get a survey done on that.
Right.
Which typically is required. It's called an ALTA survey, America Land Title Association survey, and they can be thousands of dollars.
Yeah, they're expensive.
Yes, we had one last year. It was I think it was a 12-acre parcel, and they had an ALTA survey done, and it was about $10,000.
Yeah.
Normally they can be 2 to 5.
Well, yeah, I was going to say in inner city Seattle, which is a rectangular 50 by 100 square foot lot. Is that $1,500?
Could be a couple grand.
Yeah.
Yeah.
Couple grand.
Yeah. I mean, it depends on how in depth they're needing the survey to be, and to really show. If they need to show just the parcel boundaries, it's less. If they're showing the parcel boundaries, where the home is, where it falls on that, other structures, all that kind of stuff, then they're doing more work. It incurs more cost.
Right.
But yeah, they're pricey.
Speaking of cost, one of the things we're going to go over is the cost of the title insurance policy. That's based on sales price, right? It's kind of a risk level type thing. And so prices range in various levels based on sales price. It's
Absolutely.
going to be more for something more expensive and less for something less expensive.
Yeah, because we're incurring different levels of risk with that, and
Yeah.
so we do every year in July. We all put forth our rates. All the different title companies put forth our rates, and we never know what the other companies are going to be, and we're usually all pretty in line with each other. But depending what the price is, it's usually $50,000 increments. The cost of the title insurance gets bumped up.
It gets bumped up. And it gets bumped up in what kind of increments?
There's no specific standard to it. It's not like every $50,000 it goes up 10% or something.
Okay.
But
it's not like $50.
No.
Yeah.
No. Yeah.
It's kind of like it's a step up.
A little step up. I mean,
Yeah.
it probably would be something between 5 and 10% that goes up in cost, but it does. You have certain variations, and then once you get above, $1 million, $2 million, you have differing amounts that go into that. We don't even necessarily have a rate schedule that shows that. We actually have to go to underwriting, and they figure out, okay, this is going to be a $5 million sale.
It's like a custom quote.
Very much so.
Yeah. Who gets to pick the title company in a transaction? You've got the buyer, you've got the seller, you've got the brokers on each side. They're managing brokers. Who gets to? Let's use Chris Rainier title.
So in a balanced market where you have enough
which we've
inventory,
not had for many years.
it's been a while.
Yeah.
You typically have the seller is choosing the title company. The buyer is typically choosing the escrow company. And again, that has to do to the fact that the work we're wanting it to be done ahead of time. So a lot of times as a seller, they're going to request title to be done through Rainier Title or Brand X or whoever.
They're going to pull title way before the thing is listed,
Yes.
possibly,
Yes.
so that they can upload a preliminary title
With the listing.
to their listing. Here's full disclosure. Here's as far as we can get right now. This is where it's at. So seller chooses title company, escrow often, and that can go either way.
Yeah, lately it's been the seller is the one who's designating escrow.
Okay.
But in more balanced market, you typically have seller chooses escrow, or seller chooses title, buyer chooses escrow.
Yep.
But lately they've been hand in hand. The seller's typically been the one who designates both of those.
Okay.
Yeah.
And we talk a lot about real estate deeds. Where does the deed fit? Deed's also kind of one of those terms. It's like, yeah, I've heard that. What does that really mean? And how does that kind of fit in with the overall title process?
Gotcha. So the deed is the document that is publicly recorded with the county assessor that allows the property to be transferred from Sean to Chris if I'm buying from you. And during the title process, we are, again, researching this property. We're getting everything to find out about it. We're disclosing it to the buyers and sellers for them to research. Once escrow gets involved and they have the new buyer's name, they are preparing the conveyance deed. So it can be a special warranty deed, statutory warranty deed, any of those kinds of documents that can transfer. And that document is recorded at closing. So you can have buyers and sellers both sign with escrow a day in advance of closing, a week in advance of closing. It depends what the lender requires. And then once we get to the day of closing, so if somebody was to close today, we actually take this recording package. We have funds to pay off excise taxes for the purchase, and then we take that document down to the county and it gets recorded. It gets a recording number. And at that point in time is what conveys from seller to buyer. And so that's the publicly recorded document that shows you sold to me on this date. This is the legal
Here's how the
description.
transfer of title went.
Yep, exactly.
A question I get asked all the time is, all right, I bought this property in a foreclosure. I got a special warranty deed. I got a bargain and sale deed. I bought it at sheriff's auction, whatever. I got something other than a typical warranty deed, which is the full bundle of rights. When I go to sell it, do I have to give one of those deeds as well?
No, you can actually change it. So it's an aspect that if you purchase at an auction, the typical transfer is done as a trustee's deed because the trustee of the property is the one who's selling it. And so they're going to be the ones that sell to you at a foreclosure. Well, you own the property for 6 months, a year, 5 years, whatever, and you decide to sell it. You're a new owner. Again, it's kind of started over with you. And so you can actually offer the warranty that comes along with the statutory warranty deed. So you're insuring.
Is there a minimum amount of time you have to own the property?
I've never heard that there's a minimum. I mean, if you were to buy it on the first and then list it on the second, and then you sell it a short time afterwards, as far as I know, you are able to still offer a special warranty deed or statutory warranty deed.
Okay.
I have never heard of any requirements that allow for that to be changed, but it does happen. I mean, there are times when a different document shows up per the transaction that the seller is offering. So it's somebody's passed away, they're the personal representative. Personal representative's deed is what sells.
Yeah.
In a foreclosure where the bank took title to that property and then they're selling it in the market, which we saw a lot in 2007, 8, 9, 10, 11.
Yeah.
After the market crashed, they were all sold with bargain and sale deeds. And it's just due to that.
We saw a lot of those, didn't we?
We saw a lot. I bought my home with a bargain and sale deed. But it has to do with who is conveying that property.
Yep.
And the bank's never been in your property to know if the roof is leaking or any of that kind of stuff. So they can't offer that statutory warranty deed to the new buyer. So the bargain and sale deed has less.
That's why you're getting something less than a warranty deed, something less than a full deed.
Well, it's different. I wouldn't say it's less. It just is different forms of,
Okay.
of reprehensions if you want to come back
They're
for
giving
this.
as much deed to you as they can.
Absolutely.
But they don't necessarily know. Should people be afraid of a special warranty deed, of a bargain and sale deed?
If you do your due diligence, I mean, you can't necessarily recommend this one is that. I wouldn't do this, I wouldn't do that, because that's unfortunately offering legal advice where we are in the hub of legal advice, but it's tricky
Right.
to that. But like anything, if you're buying a property, you want to do your due diligence. You want to hopefully be able to get an inspection. You want to review the title report. You want to be able to look at those things to make the best case, decision for you. And in some instances, again, the best you can get is a bargain and sale deed.
Right.
But
That's all you're going to get.
Yeah, typically you're also
Yeah.
getting a better deal on the home.
And that's part and parcel.
That's part of it.
Yeah, this is the kind of deed you're going to get. You're not going to get a full warranty deed.
Exactly.
You need to roll with it.
Yeah.
Figure out if you can deal with it. Because some people, I've known buyers who were like, yeah, we're not doing that. We didn't know we were getting into this. We're gonna get hosed.
It's as is. And I mean, we see it occasionally when somebody's passed away, the personal representative lives in Texas, and they're now selling the home. They're the one that has the right to sign on behalf of the seller, and they've never been in the property. They don't know if the roof leaks. They don't know if...
no idea.
They have no idea.
They just happen to be the guy that ended up, he's signing off on it.
Exactly. So they can't offer that. And so that's the best, as you said, that they can offer to it. And yeah, again, as a buyer, like anything, you want to do your due diligence.
Yep. One of the things, so we've kind of touched on this, so you get that preliminary title, what should you be looking for?
Gotcha.
What are things that, as a broker, I should be looking for on that first, email that I get from the title company? What do I keep an eye out for?
So you're representing the sellers, in essence, and you
Yep.
open title, and we get you out the title report about 2 days later, and you get it. You want to look for a couple things. Number one, that I think is most important, that the vested owner that we're showing on the title report is your client. Very important, because you want to make
Pretty
sure.
basic.
Yes, yes. So it's very important.
Okay.
One of the things that we do is we send out the title report. We also send out a snapshot of the title report, which is just a one page, which shows who the vested owner is, if there's any encumbrances that we're seeing, if there's red flags, that kind of stuff, for an agent to be able to brief through it very quickly. But you definitely want to check if the vested owner is correct. It's a good idea if you're the agent, or at least you're with your client, to go through it, because you want to take a quick look to see if taxes are up to date. We're going to show that. You want to look to see that the mortgages that are showing on title are the correct mortgages, that they are the ones that they're currently paying. It's nothing old. It's nothing that should have been paid off. You want to look for that kind of stuff. And then you also want to see what else is on there that may be affecting that homeowner or somebody similar name to that homeowner, to discuss with your seller. And then that's when we get involved with your seller, and we're
It's
working.
like, who is this guy? Who's this guy coming up on title?
Yes.
Where does he fit in?
Yes.
Let's check it out.
Yes.
So read through that preliminary title report.
Yes. And if you have any questions, that's what somebody like myself does. That's what our
Right.
title
So few
officers do.
people read through.
Yeah.
So few brokers read through title reports on behalf of their clients.
It's important. It's
Yeah.
important. And for the other side of the coin is, once your purchase and sale, say you're representing your buyers, why it's a good idea to look through a title report is, you don't necessarily need to worry about the things that are on there that are currently affecting the seller. You are more worried about the things that are affecting the property. So if your buyer has an intended use for that property, they want to look through the underlying documents, the CC&R, covenants, conditions, and restrictions. They want to look through the easements. They want to look through those sorts of documents to see if there's anything in there that, again, negatively affects their intended use. So if
That's going to impact them.
That's gonna
Whether
impact
there's
them.
something recorded that, hey, you can't do a daycare here, you can't do an in-home business, you can't do...
Exactly.
Just look through your title.
And part of that, the reason why they're looking through that, hopefully, they signed off on a title contingency as part of their offer, and they're able to review it. Because if they find something in the title report, a lot of people in the last couple of years have waived title because, well, title has to be cleared in order for me to get it. Well, yes, it does, but it's the things that are on title and that affect that property, no matter who owns it, that you want to look at. So if you want to put in a pool, but there's an electrical easement that comes through your backyard, you can no longer put in a pool. And if that's your intended use and you sign a title contingency, you can get out of the deal based on
Right.
that.
That's a really good point.
So it's important.
So should I recommend to my brokers to do a title contingency? I know in a lot of deals over the last few years, we haven't had any contingencies, let alone title. So
It's important. It's important.
Yeah.
Because you don't want to get somebody in a transaction where, again, especially if they have a very intended use, they want to park their RV, they want to run a daycare, they want to put in a pool, they want to, any of that kind of stuff. And there's something on the property that does not allow for that, you're going to have a very unhappy client with that.
Yeah.
Or if they...
yeah, that big pool you're going to build, that's a no-go. Sorry.
Nope. Yeah, you're done. So it's very important. I think it's one of the first things that people waive when it comes to the contingencies.
Yeah. Or
but
they just don't even have it as a contingency
yeah,
at
so
all.
But it is important because
Yeah.
it affects your ownership.
Right. Yep. Okay. What would be the top 3 issues that you guys deal with, title related, that come up time and time and time again?
I would probably say common name. So if you have a John Smith, Jane Doe, Chris
Yep.
Hall,
Yep.
even Sean Reynolds, I'm sure there's
There are more than one Sean Reynolds. out
more
there.
than one Sean Reynolds
Yeah,
out
I'm
there.
in a Facebook group with about 20.
There you go. So if any of those other Sean Reynolds have a federal
Yep.
tax lien, DSHS lien, something like that against
Yep,
them,
that
it's
might
going
pop
to pull.
up.
Because when we run the current seller's name, there's a variants of slightly different spelled names, whether first name, last name, that it's going to pull in stuff that's associated with. And we want to be able to remove those. So common name is very common for us to see. Access to the property happens a lot, especially if you're dealing with more rural properties. They want to know, can I use this road? There's a road on the north, there's a road on the south. Which one do I get to use?
There's physically a road there, but I don't see it in title. Yes. What's the deal?
Yes. Or it's a private road that they have to pay certain maintenance into every year because the 9 homeowners that live on that road have to pay for that in case something happens to it.
And there's no homeowners, there's no road maintenance agreement.
Yes.
That comes up all the time.
It does. Especially with lenders. They typically require that. If it's on
and that starts with the appraisal checking off that it's a private road.
Yeah.
And then the lender goes, well, we'd like to see a copy of the road maintenance agreement. There isn't one. I've owned this home for 45 years. You mean I got to go talk to my neighbors and get one? Yes, you do.
Lender wants to make sure you can get to your property if there's a major flood or something. It's, they're sticklers that way. Access is very important. The other thing that comes up very commonly is unreleased liens.
Okay.
So we see it in a couple different aspects. Number one, say you buy a property in 2010, you take out a mortgage at that point in time, or deed of trust is what we call them now. And then 2 years later, you refinance out of that into a conventional loan. Well, through that process, escrow closed the transaction, funds were given. That lender never went through the process of what we call reconveying or releasing their claim on title with their mortgage.
Everything was done, all the payments were made, everything was cleared out, except that title company just didn't do the very last step.
Well, and it's not even necessarily the escrow or title company. A lot of times it's the lenders. And we saw it very commonly.
That's right, because they were officially vested as the lender.
Exactly.
And they got to release their interest.
Exactly. They got paid off. They just never went through that. And either it can be that something was missed. We saw it a lot with the collapse, is that those lenders went out of business. And so there's this big gaping time period where stuff should have been cleaned up and released, and it wasn't. Well, why opening title is a benefit is because sometimes we have to then track down, okay, this lender was bought by this lender, which also went out of business, which is now bought by this lender. So we have to reach out to them. They have to track this down, show that
we had a
paid
lot
off.
of those, didn't we? What a mess.
Yes. So that's very common.
Yeah.
And we've even seen times where through a previous transaction. So if I bought from you, you were paid off, your lender was paid off, I own the property, I'm now selling it 7 years later, we still show your deed of trust on the property. And so we actually have to then go back to the previous deed of trust, which should have been reconveyed. And that can happen, lender going out of business. We had a lot of smaller escrow companies that went out of business. Yeah. And so if it's in that time period.
Just a lot of businesses going out of business.
That happens.
Yeah, especially when it started by real estate. Collapse in the real estate market.
There was a big boom, so there was a lot of us out at that point in time.
A lot of up, but a lot of down. Yep, that was interesting. And speaking, so those are your three big issues you deal with, is common names, weird stuff some other guy did or has recorded. It's not you. Got to square that away. Unreleased liens. They're still out there, still hanging out there. And then access, physically accessing your property. Now, what happens if a title company makes a mistake, doesn't catch one of these?
That's where your coverage comes into play.
Probably not a good thing in your case. How often does that happen?
You know, I haven't heard statistically wise how often we get claims, and even with how often we get claims, the ones that are valid. I mean, typically when we're recommending to a homeowner that they should file a claim, we have really realized there's a problem here.
There's an issue.
There's an issue with it, and so we recommend that they file a claim. And typically when we're recommending that, they have a valid claim on title. Now, there are times when stuff happens and it's not covered by it, and we can say, well, you can file a claim, but unfortunately this is why they're probably not going to pay it.
Right.
But again, if there was a physical encumbrance, say your fence is 5 feet into the neighbor's yard, and we didn't catch that because when we looked at the aerial photos of the property during the examination process, we didn't see that it was over, we didn't have any indication, you would file your claim with the title insurance company. We would then look through that, examine it, say we missed this physical encumbrance, and then we would be on the hook for having that fence taken down, rebuilding the fence. Yeah, exactly.
Yeah. Okay.
Exactly.
In my years of experience, I've known of very few issues where the title company actually missed something and had to pay out. It's usually something really random and weird.
Exactly.
Yeah.
It's the unrecorded liens. It's the unforeseen
stuff that
things.
pops up.
Yeah.
And that's why you're getting title insurance.
Exactly. It really, again, we do so much work and research and diving into the property before it even gets into the new buyers' homes. I mean, that's where we're doing all of our information, where we're looking everything up, and we're being very diligent because, we want to make sure that all that stuff goes away, because it's very costly. I mean, with the stuff that can be incurred on homes, it's thousands upon thousands upon thousands of dollars.
Especially with real estate being as expensive as it is right now.
Yeah.
I mean, and it's probably going to be.
Yeah.
Yeah, super expensive.
Exactly.
Let's run through, we talked about this earlier. Let's run through, these are issues that come up all the time in life, and they get handled through title. I'm just going to kind of throw a handful at you of questions, scenarios, and if you want to just give me a super quick, because I think people want to know, all right, that happens.
Okay.
Like, you're halfway through a transaction and your seller dies. Yeah, tough one. The baby boomer generation is not getting younger.
No.
And so we're seeing that happen.
Yeah.
Not fairly often, but it's not uncommon.
It's not uncommon.
Or maybe they've deceased already.
Yes.
And you're dealing with an estate.
Yes.
So what happens there? What happens with title?
So the first things that we try to determine is if the property is going through probate, if the person has passed away, whether they passed away 2 years ago or they passed away 2 days ago. We want to know if the probate has been started, if it's been completed, because the probate is going to resolve where that person's assets go.
Yeah.
If the person passed away a number of years ago and there was no will, it never went through probate, we have to get some additional documentation from the seller that is indicating how they have the rights to sell that property. And we have them fill out something called a lack of probate affidavit, which kind of has them fill out, to the best of their knowledge, who, if there are any other heirs, this is the deal, this is what's going on with it. This is, it's 6-7 pages of them filling stuff out.
So there's a set format for all this stuff. Same thing like you've got a federal tax lien on the property. You didn't pay your income taxes, you are the seller. That's recorded on your property. You want to sell your home.
They have to be paid off. When it comes to typical lien order in the ladder, it's, for the most part, it's done by date. So the earlier the date is recorded, the higher it is on the ladder.
Okay.
But in the steps of things, you have property taxes, federal taxes at the very top.
Yeah, the IRS seems to get their... They get paid.
They've got a preference to be up there at the top.
Yeah.
So that would have to be paid off at closing, and either there's going to have to be enough proceeds in the closing of the sale to pay that off, or the seller is going to have to bring some additional funds to the closing table to make sure that gets
See if it's
paid off.
worth their while. If they're getting a good enough deal, they may want...
either hold off or they're going to have to work with, and they have to work with the IRS to potentially take a lesser amount for it. And
the IRS will do that. They want to get paid.
They want to at least get paid something.
Yeah.
But you do have to start that negotiating with them.
And that may take a while. That's not going to happen typically within 30 days.
It's typically
the IRS doesn't care. They got a lien on your property. They've got you.
Yes.
Yep. How about the sellers are getting divorced?
If the sellers are in the process of getting a divorce, that can cause a lot of issue for a closing, because at that point in time, their names are both still on title. And if they're absolutely adamant about having this home sold before their divorce gets finalized, their attorneys have to work with each other to agree as to who is going to be able to sell this property, or who it's going to be granted to in the end. That
sounds expensive.
It's not cheap. This is why attorneys drive nice cars. They would then have to go to the courts. It would have to be approved by the courts. We would then have to get that documentation to verify who can sign on behalf of that to sell the property. So it can be a timely situation. It's not something that can just be resolved.
Any of these can be.
Yes.
How about a judgment against the buyer or the seller?
Judgments are a little bit trickier. They're in the ladder of things. They're at the bottom. We have federal tax liens and property tax liens at the top, assessments, then mortgages, then construction liens, and then judgment liens.
So they're kind of the bottom of the pile.
They're at the bottom of the pile, and
Okay.
typically judgments are going to affect the individual versus the property, which is why.
So
they're
they don't,
at the
they
bottom.
can't, they are not attached.
For the most part. Now there are times when they are attached to the home, but it's more when we see judgments, it's because person didn't pay a car loan, person didn't pay credit card loans, they had some sort of debt, they had this judgment filed against them.
Would that be the same as like a child support lien as well?
Yes.
Yep.
Yeah.
Okay.
Now DSHS does fall a little bit higher, but it's a judgment that can be against the individual. And the DSHS liens can even be the same way. They can be affecting property, or they can be affecting the individual.
Okay. They're kind of like a mini IRS. They can go after,
Yes. Yes.
they can make you like not be able to renew your driver's license.
Yes, it's a big deal.
Yeah.
And then even the amounts on those are different than sometimes what the actual amount is owed. Same with a federal tax lien. It can mention a federal tax lien of $1,000, and that's what's done. Well, once the IRS does their investigation and fully get an amount, that amount can be $200,000. So it's even the amount that's on a federal tax lien isn't necessarily what is owed to them.
Okay.
But the
It's
judgment,
just what's there.
exactly.
Yeah.
The judgment liens. There are ways that we can insure around them, but for the most part, a lot of them have to be paid off. I mean, we've had times where a buyer is wanting to purchase, they have a judgment against them, and we have to get the okay from the lender to say we're willing to still loan this money to this buyer, with them still having this judgment attached to them as a buyer. And basically they are saying we're going to kind of be in second position to this judgment. But then the homeowner also has to agree to sign something called a homestead affidavit. So it's a way to kind of protect the lender. So
Homestead, that sounds old school.
it is a little old school.
Yeah, that actually originated from, did that originate
Homesteaders.
with- yeah.
Yeah.
Homesteaders and the Homestead Act. Yeah, that is,
Yeah.
that's,
So
that's some early American history.
it is. It's pioneer and pushing across the West. Yes. So there are ways that the judgments, we can still move forward, but a lot of requirements have to be met. For the most part, they're going to be paid off, whether they're attached to the buyer or the seller. They're going to be cleared.
So from your end of things at title, what would you recommend as something that sellers should be aware of, buyers should be aware of, and real estate brokers should be aware of? Like, what would you tell all this group of people, hey, here's one or two things from my title perspective that's really going to help you out down the road? What would you say?
You
Words
definitely
of wisdom from Chris Hall.
You definitely want to be aware of what's on title with you as a homeowner. I mean, that's one of the
Yeah.
important things.
I think we've made that pretty clear
Yeah,
of how the impact of having a clear title versus having any of these laundry list of
Yeah. If you've gone
stuff.
through a bankruptcy, if you've gone through any of that kind of stuff and you're still a homeowner, you want to check back in to make sure that those items have been cleared. It's very common that people go through bankruptcy and they think that this was resolved and I'm clear and this and that.
that it's been discharged or
But
whatever.
you have different kinds of bankruptcies.
Yeah.
And even with one type of bankruptcy, you have to do these 8 additional steps, which should have cost you more money. Your attorney should have done it, and they didn't do it because you didn't request it. And
Right.
so there are things that you should definitely be made aware of on your property and know that you are the vested owner. People are worried all the time. Hey, can somebody record a deed and take my title away from me? No, because it's an illegal deed. But there
Right.
can still be something like that
you
recorded
still might
against your
have
property.
some real headaches.
And we would have to
Yeah.
go through the process of resolving that and making sure that
Yeah.
things are verified.
Yeah. The single Latin term that I know through real estate being caveat emptor, buyer beware. Read your title report.
It's very important.
Get a title report.
Yeah.
Okay, yeah. So that's just basically people need to be aware of what's out there, what could possibly be out there. And title is one way to ensure vesting their interest is that the property that they're buying, it is what it is.
It is and that's the other
Yeah.
thing. As a buyer, you also want to hopefully verify that the property you're purchasing is the property that you intended to purchase. I mean, when one of the terms that gets thrown a lot is a legal description. A lot of people don't understand that is what you're purchasing. You're not purchasing 123 Maple Street because the address can
Right.
be changed.
Yep.
You are purchasing the legal description,
Yep.
which is lot 1 of Sunny Acres.
Because every property's legal description is unique.
That's the
There's only one.
Yeah, that's the legally binding
Yeah.
description of the north, south, east, west boundaries of that property. So you want to ensure that that is the right thing that you're purchasing and that you signed off on and that you're wanting to buy.
Right, right. So now, by this point in the podcast, we understand how important it is to have title. Why use Rainier Title and Escrow? What makes Rainier different than all the other title companies out there?
So we're a locally owned title company. We have coverage in Pierce, King, Snohomish, and Thurston County. All of our employees live local, they work local, they're here. So we're really in touch with what's going on with local governance. We have regular contact with the cities, with the counties, so we know what's going on, as well as most of our employees have years and years of experience. We, in our title plants alone, there's something like 150, 200 years worth of experience out of the select amount of title officers. And then we have our title assistants that are brought up. So a lot of years of experience in knowing the way things work in these counties.
This is not their first rodeo in title.
It's not their first rodeo. We do still have stuff come up that occasionally stumps, and we all have to put our heads together and work with underwriting and get some advice on things. But for the most part,
You've got enough resources within your personnel where somebody can figure out something.
Exactly. And then I've got direct access to our executive team. I can literally pick up my phone, call my CEO. I can literally pick up the phone, call the people at the top of the chain to try to get an answer or get them involved in a transaction where we have to make a judgment call on something. And it's rare. For the most part, title companies are national title companies, and they're
right. And you guys are local.
We're local.
Yeah. So if a Summit Properties Northwest broker wants to use Rainier Title, what do they put on the purchase and sale agreement?
So if they've opened title, it's on a listing.
Yep.
Hopefully they're going to have a title order number. They would put Rainier Title and Escrow, this order number. If they push for escrow, they would typically write in either Rainier Escrow or the actual closer's name.
Break it out.
Yeah.
Is there a specific person you would recommend, or does it actually get it sent into the same unit? Somebody handles it?
We have multiple locations in each county, Pierce, King, and Snohomish.
Okay.
And so a lot of times when I'm working with an agent, I'll... sometimes it even just depends on the personality. If I get a good beat on who this agent is, kind of how they like to work, if they're a type A, type B, I'll usually try to pair them up with somebody that I know is going to work well with them.
Okay.
And that is.
So we can reach out to you.
Yeah.
Hey, Chris, this is my first deal with Rainier Title. Can you put me with somebody? Mm-hmm. Or hey, just handle it.
Yep, exactly.
That's what I usually recommend to people.
Yeah.
Hey, reach out to Chris. Just go to Rainier Title. They'll take care of it.
We'll get them set up.
Yep.
With the right person, the right personality, as well as in the right area.
Yep.
A lot of people want to have their closer local. We can do anything remotely. Typically closings now are done with remote signings or even mobile notaries.
Crazy, isn't it?
I go out and sign stuff occasionally with them, but it's we want to make sure that it's the right person, because your escrow closer is very important.
Right.
They're really helping hold your transaction together.
They're kind of the final stage in all this stuff. Chris, we've covered a ton of information. Thank you so much. Appreciate you kind of breaking this stuff down to a basic layperson's level. Mm-hmm. You didn't overcomplicate it, because I know title is one of those things that's out there that people have to use when in a transaction and they don't really know what it is. So I'm hoping that we've given the listener and the viewer a better perspective of what title is, and that they have a better idea of, all right, next transaction I do, if you do another transaction, these are some things to kind of keep in mind and be aware of, and it's out there. And then when you drive by like a title and escrow company, you'll
know what they do.
I know what that is.
Well, and it's the most important thing, advice-wise, is ask the questions. As a buyer and seller, if you have questions, ask them. Whether you ask them of your real estate broker, and then your real estate broker goes to us and asks those. We'll do conference calls. We'll reach out to buyers and sellers to be able to communicate that. So if there's anything that you have a question about, whether it's it's on title or you just have this other random, what is this? What does this do? What does this mean? That's what we're here for. We're here to be a resource to help somebody out and make sure they're not getting into something they don't understand. It's very important.
Right. So they need to reach out to Mr. Chris Hall, Rainier Title and Escrow, and we'll have your information in the description of the video. And I think we'll also, if listeners need the information, we've got it. Summit Properties Northwest.
Awesome.
So, Chris, thanks so much for coming in today. I appreciate your information.
Thanks for having me, Sean. I really appreciate it. It's
fun.
fun.
You bet. And again, I'm Sean Reynolds, the owner and managing broker of Summit Properties Northwest, and this was podcast number 4. Thank you so much for tuning in, and we hope to have you listen to us on the next one. Thanks again. Bye.